Matt Peterson. He joins us now, along with EY-Parthenon chief economist Greg Daco. Welcome to both of you. So, Greg, let me actually start with you on this one. How are we positioned now, given what we're seeing with these latest numbers? And what if Powell had cut already, like the president wanted to? Would we be in a better position or less so?
I think that's a great starting point. I think we always have to consider where monetary policy is in terms of how restrictive it is and what influence it is having on the economy. Right now, we have a monetary policy stance that's slightly restrictive, which is imposing some form of restraint on the economy. The other thing that is important to keep in mind is that where are these supply pressures leading into inflation? I think inflation is not right now driven by higher demand, but instead by supply pressures like higher energy prices, like an environment where you're seeing a lot of strain from AI on limited resources, which is putting upward prices on computers and electronics. Those types of pressures are not the type of pressures that the Fed is well equipped to deal with, and raising rates by 25 basis points or 50 basis points is not going to get them far. So I still anticipate that the Fed will hold tight for the time being, even though inflation is twice as high as its main target of 2%.
So, Matt, we're talking about not raising rates, but we're not talking as much about cutting. And wasn't that what this whole fight was about? Isn't that why Jay Powell had to put on the hard hat, even though that was supposed to be about a renovation issue? Where is this putting that key issue and arguably the whole argument that the president's been having with the Fed for the past several quarters?
Maybe even longer than that. He's been mad at Jay Powell since, 2018 or something. I mean, it's been a long time since the president has said, the Fed is in the right spot. But that's sort of what we're starting to hear. I mean, we heard folks like Peter Navarro, who has the president's ear on economic policy, wrote an op-ed yesterday saying he thinks that the Fed was right to hold interest rates. That's just really striking to hear from this administration that has been breathing down the Fed's neck for quite some time. And really, it all comes down to they've got their guy in the Fed, and so they're willing to trust him, or so they say.
Greg, a big political story, I think, has been the disconnect between the elites, and that can be the politicians, it can be the millionaires and billionaires, whatever, from those who are experiencing the mainstream American economy. That caused a lot of upheaval in Washington in the past couple cycles, and one has to wonder whether it's about to happen again with midterms and beyond. How do you think about this in the frame of what you have called in the past an income-less expansion that we might be on the brink of?
Yeah, I think we're still very much in this income squeeze environment. If you look at the latest data for the month of May, you see that income is essentially not growing once you adjust for taxes and inflation, which means that there is a gradual erosion in spending power for many Americans across the country. And that's limiting, that's capping consumer spending growth. It doesn't mean we're entering a slowdown or a recession of any sorts, but it just means that the cap in terms of how rapidly the economy can be evolving is being put on, and that income erosion is going to continue in the second half of the year, notwithstanding the fact that we're likely to see lower inflation because energy prices have come down. You have to remember that one of the key drivers, the key pillars of consumer spending is wages adjusted for inflation, and that's currently in contraction territory. So when you look at the grand scheme, the grand picture of the U.S. economy, it's an economy that's still moving forward, but there are fragilities in terms of the underlying pillars of growth, which is likely the key reason why I think the Fed will eventually decide to stay on hold and not necessarily tighten in this environment, because tightening could actually hurt the economy more and wouldn't necessarily help with any of the inflationary pressures that we're discussing.